Good afternoon, all. Sorry, good morning, all. And good evening. Hope you are able to hear me.
Yeah, good point.
Yeah, Naveen.
Yeah, I don't
Any question? I think we have started zero balance splitting. So any questions on this particular? Any questions? Okay. So write down. What is zero balance splitting? First, I'll give the notes. Then next we can go with the scenario 2. Okay. Zero balance splitting. Note or whatever you can, this thing. Whenever the debit, or whenever the debit is not equals to credit, whenever the debit is not equals to credit or if the credit is not equals to, if the credit is not equals to debit at business area level, and profit center level, and at profit center level, then the zero balance, then the zero balance clearing account, the zero balance clearing account will be triggered automatically. The zero balance clearing account will be triggered automatically. Understood? So here you can see the debit line, it is showing at profit center level. Debit, it is showing A1000, and credit, it is showing A1100. So debit, which is not equals to credit, correct? Which level it is not equal? Which level it is not equal? Hello?
know. Profit center level.
Profit center level. So debit, which is not equals to credit. Then what happens is, because this is here, it is not equal. So that is the reason here zero balance is got triggered. So it made two separate line items for each profit center. One is for A1000 and A11,000. So there should be debit and credit should be equal as per our double entry bookkeeping system. Every debit should be equal with the credit, or credit should be equal with the debit. Correct? So that is the reason SAP has provided the zero balance clear. Whenever it is not equal, then automatically zero balance clearing account will be get triggered clear at a business area level and at profit center level. So here at profit center level, it is not equal. Next, we will see any questions here. Any questions?
Sir, hello, sir.
Yeah, please go ahead, sir.
Sir, like if the on debit side or credit side, if we are not having profit center or business area, then this zero balance clearing will
Won't
come into
compare,
picture.
right? It won't compare. If it is there, then only it will compare.
Okay, sir.
Yeah. Next one, scenario 2. Scenario 2. Entry view. Okay, I'll take it as in salaries account. Debited 25,000 I'm taking. $25,000. Next one, I'm taking Hyderabad. Next one, A9,000 corporate profit center. Now, credit line to salaries payable salaries payable 25,000 Guntur. So A 9,000. Now, is debit equals to credit?
No.
Is it debit equals to credit?
No, Naveen.
Yes, sir.
Is it equal?
No, no, no.
Business area level, not equal.
Business area level, it is not equal. Earlier, the profit center area, it was not equal. Now it is a business area level in this particular scenario. So then how the entry will be plotted in GL view in the sense, how the entry will be going to plot in the sense, GL view. Okay, so GL view, it will updated in how many ledgers? 0 ledger, AX ledger, AY ledger, and 3 currencies: document currency, local currency, hard currency. Correct? So here it will be taken as, so I'll copy here. Salaries account debited 25,000 Hyderabad, right? So here segment would be a corporate. So here what it will be activated here, because here business area level it is a Hyderabad but debit line, and credit line it is showing Guntur. Then what it will be activated automatically whenever debit is not equals to credit, then automatically zero balance clearing account will be get activated. So to zero balance clearing account, zero balance clearing 25,000, 25,000. So it is making debit equals to credit at this level. Or next one, zero balance clearing account debited 25,000 Hyderabad. Sorry, it's a Guntur. It's a Guntur. A 9,000. A corporate center. 2 zero balance. Sorry, here 2 salaries payable. $25,000. A Guntur. A 9,000. A corporate. I'm not able to hear you, Parminder. So how we are going to be updated here? So here debit to credit, debit to credit, corporate, debit to credit. And here credit to debit, credit to debit, and segment will be derived from profit center. Segment will be derived from profit center. Segment will be derived from profit center. Just write it down. Once you're done, let me know.
Sir,
Yes, sir.
this zero balance clearing account will be coming automatically, na sir?
We need to create the ledger account.
Okay, we need to create and we need to assign. But sir, इसमें जो balance रहता ना in this which we are seeing the balance, will it be affected at the time of preparing reports?
Why it will be get affected? Because debit zero balance and credit zero balance will be get knocked off, right? Here we have a debit zero balance, credit zero balance, 25,000 will be get cancelled. And the report will be updated here, Hyderabad. And here it will be updated, Guntur. Amount will not be get affected. Understood?
Means zero balance clearing account will not be considered नहीं करते क्या sir reports बनाते हो जैसा कि trial balance.
Zero balance will be what? It's an adjustment entry, adjustment account. That's it. Understood? It's
Okay.
only an adjustment account. Q adjust,
Okay.
charge is what we are doing an adjustment in the sense it is adjusting because here debit is not equals to credit. So the zero balance will be triggered to adjust this debit equals to credit. That's it. It will not have any financial impact. Understood?
Okay, sir.
Once you're done, let me know, please. Once you're done, let me know.
Sir, one more thing. Okay, without sir, without upon profit center and without profit center or business area, debit credit दिए बगैर अपन entry post नहीं कर सकते. Debit and credit must.
See, what is the new GL concept? First of all, try to understand what is the need of new GL concept.
Sir, reporting at the different
What level you need a report?
at product level and segment
Not
level
only
and
product
business
level. See, product level in the sense where from where you are going to get the product level report
from profit center.
from segment only, right? Segment is nothing but your product. Here we
Yes.
defined, right? So I need a profit center wise. When I say the profit center wise, segment will be picked. So if I'm not giving this profit center, business area segment, then what is the requirement of new GL concept? You can go with the old formula, GL debit equals to GL credit. Understood? Why we
Yes,
are
sir.
doing this in the sense clients required now, they required reports at GL level, business area level, profit center level, segment level with multiple currencies. That's the reason we are doing this. If client doesn't want these kind of reports, they want GL debit equals to GL credit, then it's not required. Is this clear? I didn't get your
Yes,
question.
Sir. Yes, sir. Clear.
Okay. Next, is it done? Kindly respond. Is it done in the sense?
Yes, no, been done.
That's
Done.
what, please. Passive splitting. Next method, third step, passive splitting. Write down passive splitting. Passive splitting will work. Passive splitting will work. Passive splitting will work based on dependency documents. Based on dependency documents or ORR or reference documents or reference documents. Or reference documents. Based on dependency documents or reference documents. What does it mean? What does it mean in the sense? See, you understood what do you mean by active splitting? What do you mean by active splitting? Zero balance is nothing but whenever debit is not equals to credit, okay, at business area level, at profit center level, then automatically zero balance will be get triggered. Okay, but what do you mean by active splitting? Quick, please. We discussed yesterday. What do you mean by active splitting?
When debit is equal to credit,
No, that is there. Debit equals to credit. But what do you mean by active splitting?
Sir, for example, if
No, just give me a definition. Yesterday I have explained. What do you mean by active splitting? What is an active splitting?
it will split the line item based on the given profit center and business area.
Why it will split? How it will split?
when the profit center is the same,
See, what do you mean by active splitting? Whatever data we have updated in entry view, the same thing will be updated from debit to credit or credit to debit. Same. No changes in that. Okay. Here you see in entry view, we have given salaries account debited 2000 and what we call profit center, we have given Hyderabad and corporate business area, we have given Hyderabad and segment, we have given profit center, we have given A9000. Clear? In the GL view, in the credit line, we have not updated anything in entry view, but automatically it has picked, it has updated from debit to credit business area, debit to credit profit center, and segment got derived from profit center. Clear? Whatever data we have given in the entry view, same will be updated from debit to credit or credit to debit. Then that is considered as a active splitting. If you want to give profit center and business area, then it will not update profit center and business area. If you update in one line, then it will be updated in other line also. If you updated in debit, it will be updated credit as it is. And if you updated on credit, and it will be, if you have entered on credit line, then it will be updated in debit line. Then that is called active splitting. Whatever data we have updated in one line or both the lines, in the same way, it will update it in your general ledger view. Understood? That is called active splitting. And we know that what is a zero balance splitting? Zero balance splitting is nothing but, okay, whenever the debit is not equals to credit at a business area level or a profit center level, then automatically it will pick up zero balance ledger account. Clear? So the use, we will discuss more in depth. So zero balance ledger account, we need to create manually. And we have an option called automatic pickup. So that we are going to select in general ledger module, GL creation. But what do you mean by passive splitting? This is another important thing. So passive splitting will take place. Okay. Passive splitting will be takes place on dependency document or any reference document. So how it's going to work, I'll show you first. Okay, dependency document or passive splitting. Just write it down example. Scenario 1, I'll take. Scenario 1, entry view. So I'm taking one example. Transportation account. Transportation account debited. Transportation account debited. Loading charges account debited. Input GST. Just I'm taking example. This is input GST account debited. This is, I'll take it as in CGST. Input CGST. Input SGST. Input SGST account. Okay. 6%. Here also it's 6%. Debit. Debit. To XYZ Service Limited. Service Limited. So here I am taking here GL view. I am taking here only the cost center, which will come in. I'll take the amounts first. 1 lakh. Loading charges. Loading charges, we have 50,000. 50,000. Input G 9,000. 6% on 1 lakh 50. 6%. 6%. 9,000. Okay. Here I am taking cost center. So which will come in CO module. Just for example, I am taking cost center 1,000. And here cost center 1100. So this is my entry view. So when it comes to GL view, GL view, okay. So here it will take 6,000 input CGST, 6,000 input CGST, input SGST 6,000, 6,000, two trade payables. So as I said that in GLV, it will link it to, instead of vendor account, it will show it as an two trade payables account. Two trade payables account, 1,12,000. 1,12,000. Okay. And here also, it will take loading charges account debited. Loading charges account debited 50,000. Input CGST 3,000. 3,000. 3,000. to trade payables. Payables account 56,000. And here 1,100. And here business area. Business area AHYD. Every cost center will have a, we will discuss more. So here in this, whenever we are posting any entry in costing module, then we will give cost center. From the cost center, business area will be get derived. So we won't give separately business area. So every cost center will have a business area. Clear? AHYD. Next, every cost center okay, it will be derived profit center. A1000. And every profit center will have a segment. Every profit center will have, sorry, profit center is also there. Here, the same thing will be copied on the credit line. AHYD. A1000. Next one, same thing. Done. So this is next one. Same thing, AHYD, cost center, profit center, segment. Understood here? So what is happening here? In CO model, we will just enter cost center, correct? But it will update it business area from cost center. It will update it profit center and as well as a segment. So whenever we create a cost center, right, in that we will also provide business area. We will also provide profit center. In profit center, segment will be derived. Just write it down as it is. Just write it down as it is. I don't have a space to mark them. I don't have space. Just write it. This is my invoice. So we post the entry like this, and in GL view, this is automatically updated here. This will be updated in GL view. Fine. This is our invoice. We received invoice like this. And once we enter this transaction, transportation account debited, 1 lakh. Okay, cost center, loading charges account debited, cost center. Next, input CGST and input SGST 66% tax to XYZ Service Limited. So they are nothing but trade payables, right? He is nothing but our vendor. Yesterday we discussed about it. So whenever we post the entry like this, then automatically in GL view, it will be update like this. Understood? Any questions here? Please go ahead. Quick.
Naveen.
Yeah.
Like see, in the entry we have given the cost centers, but it's somewhat confusing. Like we have not given the business area or profit center. Now it's making somewhat confused.
Sorry, I didn't get you. See, that's what I'm
Sir,
saying. In cost center only, in cost controlling module, I took just an example. Controlling module, what we are going here in FI module, we will create separately business area. We need to provide profit center separately, correct? But in controlling module, what we are going to do is in controlling module, the business area will be linked to controlling cost center, and profit center will also link to your cost center, and segment will be linked to your profit center. So if you mention here cost center in the entry, automatically it will derive your business area from cost center. It will derive your profit center from cost center, and the segment will be derived from profit center. Understood?
okay, Naveen.
Sorry?
Okay, Naveen.
Yeah. Any other questions from anyone? Please go ahead.
Naveen, coming to GL view, why the transportation and loading charges are getting separated?
Because we have two different line items, because two different cost centers.
Okay.
Understood? This is the different expenditure and this is a different expenditure. Different cost centers. But this is only one entry. Right?
Yeah, Naveen. Yes.
So I would like to check, right, how much loading charges, how much amount here in the entry level we have combined CGST, SGST, or whatever it is, right? But I would like to check 9,000 it is showing. But in the report, I want to see how much CGST and SGST I'm paying for loading charges. I want to see in the report how much tax I'm paying for transportation, right? That is the report we want, right? So here it is showing clearly 1 lakh we are paying CGST 6,000 and SGST 6,000. And total, how much we are paying for in transportation? 1,12,000. And here loading charges, we are paying 50,000. And on that taxes, we are paying 3,000. And total we are payable to creditor is 56,000. If it is combined, what is the purpose of the report? Understood?
Yes, Naveen. Okay.
Anyone have any other questions? So here it will be taken by the system itself, GLV, as we discussed earlier. Okay. Okay. Till now, whatever, how it is getting splitted here? What kind of splitting is this?
Passive.
It's not a passive, it's active only, because whatever data you have provided here, okay, the same data is updated here. Because if you are entering control CC cost center, in the sense, you have updated business area, you have updated profit center also here, because this will be there in your cost center, right? So this is called active splitting only. This is called active splitting only. But what do you mean by a passive splitting here? Okay, for example, this is the invoice. Up to here, it is an invoice. Now we are paying to the vendor the payments, right? We are doing the payment. So vendor payment. So again, entry view. We are doing payments now. This is invoice, and now we are doing a payment. Entry view. Okay. So how you are going to pay the payment? On what basis you are going to pay? On the base of invoice reference only. Correct?
Correct.
Whatever there on the invoice, that only we need to pay. So reference would be what? Invoice is your reference. Or what is your dependency document? Invoice is your dependency document. So according to invoice, whatever amount is mentioned on the invoice, so that total amount we are supposed to pay. That we are supposed to pay here. So for example, how much we are this 1,68,000. If you do this total also 1,68,000 only. So here vendor payment reference to invoice. Reference to invoice. Vendor payment reference to invoice. So we need to pay total 1,68,000. So in entry view, whenever we do the payment, so how it's going to take? So in entry view, XYZ account, XYZ services, debit the receiver, XYZ Service Limited. So here we are not going to give any business area, profit center or cost center. So 1,68,000. 1,68,000 to bank outgoing account. To bank outgoing account. 1,68,000. Right? We are doing a manual payment. On the base of reference number. On dependency document is invoice. That is nothing but your invoice would be the reference or dependency document. So here we are not giving any sort of business area, nor profit center, nor cost center, nor segment. Clear? Then how it will be picked? Okay. So here it will be picked. Whatever you have updated in your reference invoice, so same will be updated. It will take from the whatever business area you have taken in on the invoice, whatever cost center you have taken on the invoice, whatever profit center you have taken on the invoice, whatever segment you have taken on the invoice. So the same thing will be updated in your GL view of your payment document. For example, GL view. So how it's going to be updated? In the sense, trade payables, account debited, 1,12,000, 1,12,000. Okay. AHYD Hyderabad. My profit center is A1000. Here it will not take cost center. Cement segment. And to bank outgoing account. To bank outgoing account. 1,12,000. AHYD. A1000. A cement segment. Next one. Trade payables. Account. Debited. 56,000. AHYD, A1100, ASM. To bank outgoing. $56,000. AHYD, A1100. Okay. Understood this? What is passive splitting? See here, whenever we do the payment, manual payment, right? So here we are doing this particular invoice, we are doing the payment. So in the payment, when we do the payment manually, we won't update any business area, any profit center, any segment. Okay. That just we are doing that XYZ Services Limited account debited to bank outgoing account. Okay, that's it. Only we will give the amount. That's it. And after that, whenever we view the report, whenever we want to see the report, right? Then on the base of your invoice, the splitting will happen. Business area splitting will happen. Profit center splitting will happen. And segment will be segment splitting will happen according to your reference document. That is nothing but your invoice. Whatever entry you have posted, on the basis of that, this splitting will happen. So because this, how it got splitted, it is splitted on the base of the reference document. That is nothing but your invoice. If any splitting happens on the base of dependency document or reference document, then that splitting is considered as an passive splitting. And what do you mean by active splitting? Again and again, I'm reiterating. What do you mean by active splitting? Whatever document, whatever entry we do, we give either one line, debit or credit line, then in the report, it will be updated from debit as it is, it will be updated from debit to credit or credit to debit. Then that is considered as an active splitting. It's not depend on any reference. It depends on your line. That's it. But when it comes to zero balance, if debit is not equals to credit at business area level or a profit center level or at segment level, then it will be updated. Zero balance will be updated. Then what do you mean by a passive splitting? Passive splitting will take place according to your reference document or your dependency document. The splitting will happen. Clear? For example, payment document. Or you can say that, for example, you have posted one invoice. The people who are working as an end user, probably they know pretty well. If we are posted one invoice in Miro screen, right? And after that, we came and we have given all the details. We have given all the details, right? Like business area, profit center, segment. And after some time, you found that that entry was incorrect. That entry was incorrect. What we will do? What we will do if entry was incorrect? Probably the amount was incorrect or vendor was incorrect. So what we will do?
We need to reverse.
A bit louder, please.
Reversal.
How you will
We
going
need
to
to
do
reverse.
reversal?
In MR item.
MR item. So whenever you give the MR item, are you going to give the amount?
No, just the document number.
Just document number, right? You will give the document number, right? But we won't give amount, we won't give business area, we won't give profit center, we won't give segment, right? So whenever we do MR item, only we will give document number. That is called a dependency document. So whatever, when we reverse it, automatically the complete data, whatever data was there in that particular document, everything will be updated in your reversal document also. It will update your amount, it will update your business area, it's going to be update your profit center, it's going to be update your segment, the entire thing. So then that is considered as a dependency document. Is this clear? Any questions, anyone? Anyone have a questions? I know it's little confusion till we do the practical part. Till we do, but literature is very important. Try to understand at least 10 to 15%. Yes, no.
Okay, Naveen.
Okay. Next, we will see the config. Let's do the configuration related to document splitting. So what is the splitting method? What is the splitting method? What is the
Sir,
splitting
second,
method?
Passive.
Sorry?
Active and passive.
No, what are the splittings? I'm not asking. How many types of split? I'm asking what is the splitting method?
So based on profit center, segment,
I'm not asking
business
what is splitting. I'm asking what is the splitting method?
Document splitting.
Sorry?
Document splitting.
I'm asking what is splitting method?
New
On
GL.
splitting method only, the document splitting will happen, right?
8012.
Correct. 8012. I think I have explained that also. This is
Yes, the first one. Yeah.
if unless until document splitting method is not there, there will not be any document types. Unless that we don't have this types, active, zero balance, and passive splitting. So remember this, what is document splitting method is nothing but they're asking what is not, they're not asking what is document splitting. For example, they're asking what is document splitting method. Is that clear? Kindly respond, please.
Yeah,
Clear
yeah,
now.
clear.
Yes, yes.
Please, because I am not sure we are in virtual. I'm not sure whether you are able to receive because of network issue or something else. You are able to receive it or not. You are able to hear me or not. Okay, so we will go with the configuration. Write down. Put a heading as in document splitting configuration. Document splitting configuration. Write down. Write down. Classify GL accounts. Classify GL accounts for document splitting. Classify GL accounts for document splitting. Classify GL accounts for document splitting. Write down the path. SPRO. SAP reference IMG. Financial accounting new. General ledger accounting new. Business transactions. Business transactions. Next, document splitting. Document splitting. Classify GL accounts. Classify GL accounts for document splitting. Classify GL accounts for document splittings. I'll go with SAP once again. Write down SPRO. SPRO. SAP reference IMG. SAP reference IMG. Next one, financial accounting new. Financial accounting new. Clear? Financial accounting new. General ledger accounting new. General ledger accounting new. General ledger accounting new. Business transactions. Business transactions. Business transactions. Next, document splitting. Document splitting. Document splitting. Classify GL accounts for document splitting. So these are all new. So that's the reason we don't have any transaction codes as of now. It's not updated. Okay. So click on IMG activity button. Click on IMG activity button. Okay. Next. AOCA. Give your chart of accounts. What is our chart of accounts? If you don't remember, give your chart of accounts. This is Adani AOCA. Give chart of accounts. Give chart of accounts AOCA. Write down. Give chart of accounts AOCA. So click on OK button. I'll select all. I'll remove once again all. So here we need to, whatever account types we have given, that we need to give again. So press new and I'll save it. I'll save it first of all. Okay. So here, whatever account groups you remember, that again we need to give. So I'll come back. Right, give AOCA. Okay, press new entries. Press new entries. So next. Okay, so here we need to give, we have already defined account, whether you remember it or not, we have defined account groups. In the same way here, the same we need to give. So 1 lakh, 1 lakh, 2. So we have given, this is a share capital range I am giving, 1 lakh to 1 lakh. So here it has given item category. Item category means, so this particular item will come under balance sheet, or this item come under vendor, this item will come under customer, or what. So material, asset, whatever it is. So we need to check accordingly. So here select item category. So it will give all the item categories: expenses, revenues, assets. Okay, we have these are the item categories, different item categories. So this is nothing but the ranges we have given share capital. So this will come under balance sheet account. This will come under balance sheet account. Next one. Okay, next we have given 1,10,000. If you don't remember, then go and check your account, this one. So what is 1,19,999 we have given? Account groups. What is the account group range we have given for 1,10,000 to 1,19,999? What is
Reserves
your
and surplus.
exactly reserves and surplus? So this is also a balance sheet item. So again, I'm reiterating, without practice, it is impossible to remember the things. Okay, this is also a balance sheet item. 1,20,000. 1,20,000 to what is this? 1,20,99.
Accumulated depreciation.
Accumulated depreciation. So depreciations will be taken place on assets. So we will select asset here. 107,000. Next one. 1,30,000. So what is this? 1,30,000. This is nothing but secured loans. Right? This is also a balance sheet item. 01,000. Right? Next one. 1,40,000.
But Naveen, asset is also balance sheet item, right?
Yeah, but SAP has given a separate for that, right? Automatically, it will link it to balance sheet only.
Okay.
Yeah. So when it is as given separated item category, then we can take it. If it is not provided, then you can take it as a balance sheet. Okay, 1,40,000. What is 1,40,000? Unsecured loans.
Unsecured. Loans.
01000 unsecured loans. Next one, 1,50,000. Sundry creditors. Nothing but trade payables. Trade payables. So I'm going to give 5,001 range. So what I'll do here. So here, two types of vendors we will have. Normal, two types in the sense, normally for vendor, we will do payments, normal payments, and sometimes special payments, nothing but down payment, advance payment. So I would like to categorize this item category into 1,54,999. So what does it mean? I'm just giving here and vendor. We have a special GL vendor. So here vendor, you can select. Two categories are there here. So one is vendor and next one is special GL transactions. Special GL transactions are nothing but here sometimes you will order some goods or services. So for that vendor will demand for down payment or advance payment, correct? Advance payment. So first we will do the payment, advance payment, and after that vendor will supply the goods or services. And after that, by deduct whatever advance we have done the payment, that will be deducted and the final payment will be released to vendor, right? So this kind of advance payment, whatever we are doing, that in SAP, that will come under special GL transactions. Special GL transaction, vendor special GL transaction, customer special GL. So that is nothing but your advance payments. So here first I'll say,
Naveen,
yes, sir.
this screen, no, earlier you have shown that screen 101, that screen not still we have not defined, right? But it's coming. Yeah.
Which one?
No, this account groups you have selected, no, that
This one.
special GL codes and all.
This one.
Yeah, no, while selecting, sir, that we can select that. No, this one and all, cash account, taxes, withholding tax, material. All this we have not done, right? This.
No, this system will, SAP standard provided one, this one.
Okay. This all standard from
Yeah,
SAP
SAP
side.
standard provided one. This is we have not created.
Yeah, special
This
GL
will,
transaction and all
yeah,
have not yet created.
exactly. This will be provided by SAP only. These are the standard account types. SAP item categories.
Wow.
Okay.
So and should see it's similar like account groups. So
No,
that is the reason.
Here we whatever account groups range we are giving here, we are defining here. But item categories, this is SAP standard one. And we are selecting according to our account groups, we are selecting relevant item category.
Sure. Understood.
Okay.
Clear.
Next. 1,50,000. What I'll do, I'll for special GL vendor, I'll go with 1,55,000. Because we have defined 1,50,000 to 50,000 999 for trade payables. So I'm dividing that into 1,50,000 to 1,54,999 for normal vendor and 1,55,000 to 1,50,999 for special GL. Okay. So there are a lot of things will be there. So 03100 vendor special GL transactions. Next one, we have given 1,60,000 to 1,69,900. So this is for tax payables, right? This is also, so we have a separate item category for taxes, tax on sales or purchases. So here you can see here, tax on sales or purchases. Next one, 1,70,000. Zero balance ledger. We are going to create, we have not created yet. So that is also balance sheet item. 01,000. Next one. 1,80,000. to 1,89,000. Okay. Next assets 2 lakhs. So cash account. So this is asset. So we have asset category separately, or you can take it as somebody. So we can take it as an asset. Next one. Next one. This is balance sheet item. Next one, 2,20,000.
Naveen, won't be 209,999.
Sorry,
It will be 2 lakhs to 2,99,99, right? Or
2 lakhs
9,000.
Sorry, I didn't get you.
The asset one,
Mhm.
2 lakh to 209,999, right?
Sorry. It's my mistake. Thank you. So 22,999. This is balance sheet item. Okay, next one. This is inventories, 2,30,000. 2,30,999. So it's a material. Inventories are nothing but material accounts. So we have a separate material accounts. 06. Just write it down till here. Once
Sir.
you're done, let me know.
Hello, sir.
Sir,
Sir, one doubt.
Please,
कि asset की जगह balance sheet भी account दे सकते हैं ना sir?
that's what I said, right? If I know something specific asset, then it will link it to current asset, fixed asset. We are going to define in future. Already we have defined in our account groups also. You can take in balance sheet also, but system will have a little confusion, right? As per the series, it will take either asset. You can take your balance sheet also.
Okay, sir.
Clear? That's what somebody asked me, right? It is a asset. So by looking at asset, it will take, as per your series, it will take liability. But if you know something is an asset, depreciation. So client may ask you, right? In balance sheet, so from where it will be get deducted depreciation, accumulated depreciation. Clear? So then we will have a question. Then on assets, we will have a depreciations. So that's the reason specifically I'm selecting here. Clear?
Okay.
You can select, not an issue. Okay, next one. Once you're done, let me know, please.
Done away.
Okay. So this is the only challenging thing for any consultant. We need to do manual thing. These are the things we need to do manually. Account groups and these things. Item categories in new GL accounting. Okay, 2,40,000. So this is nothing but cash and bank. So 2,40,999. Okay. So this is cash account, cash and bank account. 2,40,000 series we have defined. So we have a 4,444. Yeah, cash account. So select cash account. Next one, customers. So customer accounts also, just we need to trade receivables. So we need to define same like trade payables, 2,40,000. Two lakhs 49, 2,50,000, Trade receivables, 2,50,000. Okay. 2,54,999,999. So we have a same like normal customers and special GL customer accounts. So we will select first normal customers. Okay, then next 2,55,000 special GL. So sometimes we will whenever we sell the goods or services to customer, so we will request an advance. So then that will come under special GL. Customer special GL 2,100,000. Just write it down. Two lakh 60. $2,60,000 tax receivables. Tax 69,999. Tax receivables. Same thing. 5100. Same thing. It will come under 05100. Here in liability, it will become tax payable, and here it will become tax receivables. Next one. 2,70,000. Let's 80. I think this is the last one we have defined. Okay, next one, revenues. After assets, we have defined revenues and expenses. Three lakhs. It's a revenue. We have a separate item called revenue. Three lakhs 10,000. 3,999,000. 30,000. That's 20,000. 30,000. That's 30,000. 3,39,999. Lakhs, 3,10,000, 3,20,000, 3,30,000. Okay, is it done till here? So we can go with the expenses. Okay, 4
Yeah,
lakhs.
done now.
4 lakhs. 40,999. So expenses, I think 2,000. $41. 41,999,999. 20,000. 42. 42,999,999. 3. Just write it down. So we have defined GL accounts.
We have 460 also, Naveen.
Do we have 460? Okay, done.
Yeah. That is other indirect expenses.
Well, then we can go ahead. Now we have 460. 469999. That's it. So just write it down.
Sir,
Sir,
one doubt. Like,
please, sir.
yeah, we are specifying here like which category it belongs to.
Correct.
If we are not giving that account group, means we cannot split those accounts. Am I right?
Exactly. In new GL accounting, you can't do it. In new GL account reporting, in classic GL, you can do because already we have done the accounting groups. But if you want to generate any report in new GL accounting without this item category, we can't do it. It will show.
So, sir.
Yes, sir.
Yes. So split.
Can I go a
नहीं कर
little
सकते
bit up? Yeah.
Sorry, I didn't get it.
account. Sir, account group को split नहीं कर सकते account groups के GLs को.
Classic GL, we can do it because already we have done in classic GL account groups.
Yes.
Correct.
Yes,
But in new GL accounting, whenever you are posting some entry, the item category, it will not take if you are not doing this activity. It's not going to split. Clear?
Okay.
Navin, can you go a little bit up?
Yeah.
It is not covering all that. Yeah, fine.
Up to 460,000. Once you're done, let me know.
Done. Navin.
Okay. So that's it for today. And just save this. Click on save button and save in your transport request. And tomorrow we are going to see classified document types for document splitting. The next step, we are going to see define classified document types for document splitting. Clear? So kindly check it out. I'll share yesterday's recording and today's recording, but kindly refer once before you proceed. Without practice, we can't remember anything. Again and again, I'm reiterating. Data entry is different and practice is different. So everything is interrelated, interdependent. Till GL, completion of GL module. Yes, sir. Someone was asking something.